And the opening bell just about to kick off. As I mentioned, lower after that sell-off in China. You want to watch Disney shares after that deal with Marvel Entertainment. We're going to be talking to Bob Iger in just a few moments. But first, let's get down to Suzanne O'Halloran at the New York Stock Exchange. And I'm being told, in fact, that Bob Iger is now on the phone with me, or actually now with me. He is the Disney CEO. Mr. Iger, thanks so much for joining us on this deal with Marvel Entertainment.
Good morning.
Well, the thing that strikes me the most from this deal is what is in it for Disney at this point? I mean, getting these characters, these iconic characters, what is in it for Disney?
Well, this is what Disney's all about. We love great characters and great stories, great heritage, characters and stories that have universal appeal, that work on new and old media platforms, that cross territories around the world, and that's what Marvel is all about. Plus, it's got great people that have done a great job in creating value and creating great stories and great characters that people around the world like. So this is a perfect fit for us.
Okay, so what do you plan on doing with these characters? Are they going to be rebranded? What are you going to do with them?
No, we like the Marvel brand and think we've got a great opportunity to grow the Marvel brand. And so Marvel will live in some respects on its own, but there's ample opportunity for Marvel to live in places like Disney theme parks and on television channels and Disney stores, for instance. So this is an opportunity to not only grow the Marvel brand, but to use Disney's reach from a distribution perspective and a marketing perspective and a touch with customers or consumers all over the world to grow Marvel and to create even more interest in Marvel.
Bob, Greg Miles here. Good to see you.
Hi, Greg. How are you? I
wanted to ask you, are you going to run Marvel on a standalone basis, essentially the way you decide to operate Pixar, to maintain the corporate culture?
Well, we think there's a real value to keeping Marvel together. They've done an impressive job over the last decade of attracting great people and really creating value. And Ike Perlmutter, who runs Marvel, is going to continue to run Marvel once it becomes part of the Walt Disney Company. And we think that's the right approach from a variety of different perspectives. Ike and I have talked a lot, and we clearly have an opportunity to integrate with Disney in ways that create more value. We're certainly both motivated to do that, and I'm confident that we'll be able to both keep Marvel together and maintain a culture that clearly has created value, while at the same time, as we did with Pixar, integrating in such a way that really enables us to grow.
Bob, $4 billion really doesn't stretch a balance sheet that much of a company your size. Some people have said you might be interested in maybe some other smaller video game acquisitions. Do you have any interest in that area at all?
Well, we look at a number of different opportunities as they come, and we do have a very strong balance sheet, so we have the wherewithal, as is the case here, to acquire under opportunistic circumstances. We'll continue to look for such opportunities. We'd like to grow in the video game space, but we don't have anything to say at this point about other potential acquisitions.
So it's not out of the cards then, another maybe small acquisition, if you saw something that's compelling?
No, it's certainly not out of the cards, but this was a compelling acquisition and a sizable one, and one that we're very excited about. We're going to concentrate on this for now.
Mr. Iger, there's some concern, though, that this deal is going to increase your debt leverage and therefore put pressure on your credit rating. Do you share those concerns?
As I mentioned, we have the strength of our balance sheet, the financial wherewithal to absorb this deal without any real complication, without taking on risk that we or our board of directors felt was in any way going to create a tough situation or challenging situation for the company. So this is something that is quite digestible from a financial perspective, and commenting on how the rating agencies react is not something that I care to do.
Bob, as you know, everybody on Wall Street is deeply concerned about the American consumer, which is not near anywhere as strong as investors had hoped at this point in the economic cycle. When you look at across all of your businesses, I'm not asking you so much to comment on your businesses, but what you see through the businesses, what are the characteristics you see in the American consumer? What's on their mind now, and how strong are they?
Well, you're right, Greg. We do see the American consumer. Actually, we see the global consumer in many different ways. And as we said in our last earnings call, we think that people are shopping more carefully, more judiciously. They're looking for value. They're looking for things they consider unique. We know that families around the world like entertainment, like leisure activity, like to entertain their kids, and we certainly still see that. But consumers in general are being more cautious. They're not shopping the way they used to, and we're not economists, so we have no reason to predict how long that will last. But we definitely have been seeing that in the last almost 12 months now.
So this means the ability of Disney, let's say at the theme parks, to offer more bargains, more so-called good buys, packages to get them into the theme parks, or become more essential than they did, let's say, at the peak, of the economic cycle.
Well, we don't have anything to say right now about the future in terms of discounting at our theme parks. There are a lot of people that are going. There are a lot of people when they go that love the experience. The price-to-value relationship, if anything, has risen in the last number of months, which we feel really good about. And our job is to create great product and to price it well, obviously dependent upon the marketplace, and we'll continue to do that.
Well, some analysts, though, have talked about your parks and resorts, so your theme parks business, as seeing worsening visibility. In your point of view, though, I mean,
Betty, you're going off in a direction that I'm really not prepared to go off in today. We're talking about the acquisition of Marvel. I don't mean to show disrespect, but we don't have any comments to make about the future in terms of consumer patterns or visibility.
Right,
or
but anybody who's watching this deal is going to wonder what the impact is on your other businesses and also the outlook for Disney. So I think it's fair to ask that question for the viewers and for the investors in your company.
Okay, well, as we said earlier, the impact on this deal on the Walt Disney Company we think is going to be very positive, and obviously positive for Marvel as well. The use of the Marvel brand and Marvel characters and Marvel stories in different Disney places is something that we think will be attractive to our customers, both in the near and the long term, and will enable us to grow in more compelling ways, and we're quite excited about that.
Okay. All right. Thank you so much, Bob Iger, for joining us, talking about the Disney deal with Marvel Entertainment. Bob Iger, the CEO of Disney. Okay.